it's Tom Lydon here in Chicago at the Morningstar ETF Conference, and I'm here with Wes Matthews, who's Director of Portfolio Solutions for Milliman. Great to see you, Wes.
Great to see you too, Tom.
I was excited to talk to you because Milliman's really based in the insurance industry, is that right?
It is, yeah, historically. We've been an active player in risk management for insurance companies.
So, insurance investing has to meet certain criteria, and I think those of us in the ETF industry don't really understand that. There's risk-adjusted portfolios that really have to be deemed appropriate. Is that right?
Absolutely. Yeah, I mean, insurance companies are highly concerned with downside protection, capital requirements, and Milliman's really been a leader in that space, where we developed a hedging strategy for the general fund assets back in the late 90s.
Yeah.
Based on the success of that, we rolled out VIT offerings and started hedging the actual annuity offerings they were creating.
Yeah. So the general fund is basically all that cash and all the premiums come in,
Yep.
and you've got to manage that, make sure it's safe, but also maximize returns. Correct?
True. Exactly.
Right. And through those strategies that you developed, you offered them within variable products?
We
right?
did, starting in 2011.
Okay, so now that same strategy available in a variable product, and then just recently, now you are sub-advising DeltaShares, which is a new ETF offering with those same types of strategies.
It is, yeah. We're excited to partner with DeltaShares. The idea was to roll out institutional level hedging that we've been experts in for a long period of time and roll out to the general public, make the retail audience and PMs have the same access to the institutional level money that we have about $1 billion minimum typically, but now it's available to everybody out there.
So again, you look at that evolution, it's really fascinating because it makes sense, the alignment with the insurance industry and the investment industry should make sense, but now being able to make that same type of investment discipline available in an ETF form makes a heck of a lot of sense because, I mean, we're not just talking billions, we're talking hundreds of billions of dollars that are in general funds, correct?
Exactly, yeah, absolutely.
So now, to a degree, Milliman is in de facto in the ETF business. Where does it go from here?
That's a good question. I mean, we have products with them that are exclusively risk managed products. We have other companies approaching us as well, looking at other strategies, using our operational ability, our cap markets access. And even if you go back to the VA side earlier you mentioned, I think we're the second largest ETF strategist actually, based on the ETFs that we're trading on the VA blocks. So there's a lot of operational ability that we have, and we're seeing that benefits definitely.
Well, and that's kind of behind the scenes. Most of us in the industry don't think of folks like you as being strategists, but in fact you are.
Yeah, absolutely.
So that's wonderful. So here's a whole new area of the market that's entering the ETF space, a whole clump of assets and not a small amount by any degree. So I expect that we're going to hear more from that as time goes on, and most importantly, the strategies that you folks have developed, because as we're kind of long in the tooth in this marketplace, having that risk-adjusted strategy is important, right?
Yeah, absolutely. It's different too. I mean, you hear a lot about factor investing, smart beta. It's more of a systematic risk strategy. So what's different is that we're not targeting single factors, we're not doing multi-factor, we're trying to take people out of the market instead of hiding in different pockets during times of crisis. So it's very different.
So great opportunities.
Yeah, absolutely.
Hey, really enjoyed it, Wes. Thank you.
Thank you.